Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up the analysis of the gold market. So here the situation stands a bit more tricky than on the euro currencies, just because market, as you can see, is calling around the right arm. So and can't just break it up and keep going with this pattern and right to the target. So the hand shoulders is not failed yet, so it's still valid, and we just actually already talked about this in last weeks, that market has made all preparation for that. So retracement back to the bottom of the right arm has happened. We're just some positions probably already have taken, or at least currently at this point, those of you who would like to trade this head and shoulders up, you still could consider taking the long positions. But all in all, in general, everything stands the same. So because market stands above 1925 area, this is, guys, gold future. So here's the chart, and the price level is a bit different. So you can see these lows they have is around 1940, while on spot market this will be a bit lower. So but anyway, until these lows are valid and market stands above it, the hand and shoulders is valid as well. So market could fluctuate and float around this area as long as it could. So maybe this is not really perfect from the hand and shoulders pattern terms of view, just because this is bullish patterns and we would like to see the upward rally as soon as possible. But anyway, as market stands above the lows of the right arm, the pattern remains valid, and this is, while it's calling around it, you could think about the position taken. Bears, as we already talked about this, have to wait and see for a breakout of these lows, drop below the arm's bottom, moving lower. In this case, we could take a look at these lows as a target. Market should drop below them, and in this case our short-term trading plan will change drastically, and we will start betting on a failure of the hand and shoulders rather than on a direct price action. But this is not the case by far, and we're still watching for possible performance of the hand and shoulders pattern. And let's consider what we have on the intraday charts. So after initial bounce up, when this drop has happened, then the market opened with the gap, which is also the really nicely looking an advantage of the futures price. It shows the gaps open and close for the of the market between the weeks, and sometimes in between the sessions, and this could bring lots of interesting information to us. First of all, if you take a look at the gap that we have here, you could see that it's not closed. So here's was the close price on a gold market last week, and here's was, as you can see, open price, or in lows that we use here. So you could see that here we have unfilled gap slightly, because this lows is not closed the gap totally. So just leave this room open. Market in most cases is tending to close the gap, and this is additional risk factor right now. So for a risk factor of those for those who already have the position, but probably, well, if you're taking position right at the bottom and around the precise level of the Fib level is around 1942, that will not be the big problem. But for those who just thinking about taking position, it might be some kind of the advantage, just because you could suggest that market could keep going low and trying to close the gap. We do not know whether this will happen definitely, but this scenario also we should keep in mind. So this could happen. Right now we're considering the performance of the market around this reversal upward action. So actually you could see it on the daily chart that here we also have this reversal bar to the upside, and we already mentioned it also in the previous reports. And if you take a look at the hourly chart, here as you could see, don't be scared of just a bit lots of markings. Actually they're just indicating the grubbers that have been formed previously. But right now on this part of the chart you could see that we have few grubbers that are, well, still valid right there, few grabbers that suggest downside action, and we have this ABCD pattern and untouched XOP. So it's 1963, this will be the XOP, which really could be touched, and potentially if this grabber starts to work, it suggests the taking out of these lows and possible close of the gap right there. So this, of course, all this performance and drop and closing the gap and even moving back to the lows 1942 fib level, it will not change the overall bullish context. It will not erase the hand and shoulders, but it's just important information for those of you who are trying to take the position, and it means that you could start thinking about the position taking somewhere from reaching of this level, XOP around 1963. So on your spot charts it will be around 1943, so you could just following the same pattern that you could plot on your chart to reach this area. I'm sorry guys, but because I'm not in office right now, I have to use the trading view charts for analysis, and this will be for this week. On the next week I will come back and just return back to the analysis in the MT4, but just ask you to be a bit patient with this week and just let me using this trading view charts. So this is the first level that you could consider. Potentially, if market keep dropping lower, you could watch for closing of the gap, dropping below these lows, and thinking about position taking maybe around this level as well. So at least currently this chance exists that it might happen. That's what we have currently on the gold market. This is mostly tactical, so this is not making an impact on the long term frame on the daily chart, but this is important nuances. If you already have the positions right there, so yeah, I do not see that you need to do something. If only you could decide to just re-enter later and now take some profit on your trade. But well, it's as you can see, double-edged sword, just because if market will start upward action right from here, you will be without any position. So from that standpoint, maybe the conservative solution will be just do nothing and move stops to the break even and see what will happen around this area if you have taken position already. So that's some nuances. I hope it was not too sophisticated. I hope that it will be useful to you. So let's see what the performance will be around this area, because this is very important in the actual decisive moment for the gold market. Once this all the tricks around these minor gaps and minor grabbers will be over, I hope that we'll come to the major action where gold will clarify whether it will follow this hand shoulders pattern or not.